Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Thursday, May the 9th, 2013. We'll be looking at the Dow Jones Industrial Average today, long-term chart, to kind of show you some things, teach you a few things. I get some questions, and I thought I could address them here. Just the objective of these videos, of course, is to teach you, so this is a good example, an opportunity to do so. This is a long-term chart of the Dow Jones Industrial Average, and going over every single over the past 20 years, you can see there's been three massive rallies, and there's been one from the start, the breakout of the 4,000 level here, all the way up to the high in the 2000 time period, and the big 2000.com bubble that we had in the Nasdaq, over and so on. You can see that we had 7,722 points moved to the upside here. In the time period after that, in 2003, back when I first started, you can see that you had a massive move, 6,564 points. And then the current one situation, obviously the low of 2009, the crash of 2008, and then all the way up here to the current level that we're at, 8,478 is the points to the upside there. Now, in this particular scenario, I'm not obviously trying to tell you that a rally can only go so high or anything like that. Just trying to show you that in the past, if you look at statistics, you can see that we've had a massive move already. There's no question about that. And so it's important because you're hearing a lot of talk out there right now. People saying, well, this thing can keep going and keep going. Well, guess what? That is how bulls always talk in every rally. That's just a reality of a rally. The higher it goes, the further people believe it could go. There's never actually a top in their mind, because as soon as you hit that level that you said there was the top, then it goes higher and you start to believe, wait a minute, this isn't the top, it can go higher. Well, that's just normal, and it's important that you take note of that. Looking at the charts, every one of these rallies has certain things in common. There will be the way that they start off. There are always going to be a little bit of wiggles along the way. It's like it's climbing, but it's not really sure if it should be. And then it starts to have a middle of the move where it starts to do something different. And that is, it starts to wiggle bigger. Okay, that's a little move here, a little wiggles here, then a big move, and then a lower move. Okay, this is the middle of the move. Then you have a different change. Now people are they're definitely happy about the move. They believe in the move. They've trusted it. It can go higher. It can just go higher and higher. And so you start to see bigger moves happen. Not just little bitty wiggles along the way like you had over here, but now you start seeing big moves with no wiggle in it. Big move with no wiggle in it. All right, that's the topping pattern, right? Over here, same exact pattern. Little wiggles along the way. We're not sure it's just going to hold or not. Then we start getting a little bit more, and we start fighting back and forth. Who's going to win this out? And then again, big move, big move. All right. Here, same basic scenario. Here we go. Up, up, up. Increase the wiggle, and who's going to win? Okay, big move. All right. This is the biggest move we've ever seen on any of these time period here for the past 20 years, with no wiggle in it whatsoever. Wiggle, of course, being just a term to show you on the chart, but they're actually pullbacks. So basically, there's a massive move here with no pullback or no consolidation period whatsoever. Of course, that's a topping situation that happens again and again. Also, for that same time period, you will notice a couple other things. If we clean this chart up here, you will notice that you've had every one of these rallies has gone on for just over 4 years, and in the 5th year, it peaks. Every single one of these. Okay, and that one here, and then again here as well. Gosh, go all the way over there, and it peaks out at the same time period in the 5th year, and then again here. If you actually do the math, you'll find that you are just now entered the 5th year. So it's important, again, to take note of this, because statistically you're going to be finding the exact same results. Not because that just what happened in the past is guaranteed to happen again in the future. The reason that you have the same kind of activity again and again in the charts is because people are the same. People's mentality doesn't change over time. They do the exact same thing. It's just a behavior economics, if you will. So the thing I want to be talking about today is a question that was brought to me was, okay, you're calling to these tops here and we're not seeing it. We've had a few points higher than you've already been stopped out on the shorts, so you're wrong. Well, that's a good question. I don't see it that way. I talked about it yesterday. And there's another question that brought up on the same time period was, you keep calling for these sellouts and we're just seeing little bitty moves, and you keep saying there's going to be a big move. Why are you doing that? Are you just trying to scare us? Is it, hyperbolic? Well, what exactly are you doing here? And the reality is, this is what I'm doing. If we take this chart and we use these little tools that we have, because we actually have a subscription here. If you go here and you break out their tools, you'll notice there's something you can use the Fibonacci tools, and everybody knows the Fibonacci rules. And a normal market correction is a 50% correction. So you can simply draw yourself your line out there from the high to the low, and you say, okay, after we've peaked, you're going to pull back to the 50%, just a normal scenario, right? And you see that you've done that repeatedly. You have come down here, hit the 50% line, bounce off it, hit it again, bounce off again, and just hold that 50% line, and you bounce it. That's absolutely normal. Nothing concerning about that. Sure, if you were buying at this time period over here at the peak and you get a 50% pullback, that probably doesn't feel very normal, but it actually is very, very normal. In this case over here, you can see that we come from the top, we come down much, much lower. We don't hold that 50% retracement. We had a massive crash there. So in this particular case, again, I'm calling this as a peak. My reasoning behind telling you you've got a massive move to the downside coming is just to inform you that you have a massive move to the downside coming. I'm not trying to scare you or anything. I'm just telling you the reality is a 50% correction is absolutely normal, and that puts you below 11,000 on the Dow Jones Industrial Average. That's a 4,000 point drop just in normal circumstances. Forget that there's any kind of a abnormality to it or anything of that nature that might come out the works. This is just a normal correction, be 4,000 point drop. So I don't care what you've already seen, the little tiny wiggles here and there, the little sell-offs. What I'm telling you is going to happen, period. And that's a 4,000 point correction would be absolutely normal. So I see a big move coming, and I'm not altering my view just because it hasn't happened maybe the day or the week that I expected it to. One of the last elements that I've done to this chart, and again, this is on the Facebook page as well as the message forum on the free website at perfectstockalert.com. If you want to actually look at this chart, it's posted there. But also, the thing I wanted to show you was that on the Ultimate Oscillator or the RSI or basically any other oscillator you would use, over a long-term chart, you will see overbought signals that are in fact calling the top and those that in fact are not. The main thing to start off with, of course, would be the price activity. So you know that once the first leg has happened, any kind of a major market peak at that stage wouldn't be important. It's that second stage, that after the middle move has happened, then you look for that. There's got to be a top in the second phase, okay? And so that's what you start looking for. And then what I did here is I simply took the situation where the Ultimate Oscillator would get above the 70 line, that's it scenario. And then at the same time, it was being confirmed by the RSI telling you the exact same thing. All right, so if I actually move this down, you'll see that the RSI was telling you the exact same thing at the same time period. Now, it doesn't call the exact day of a peak. That's not what it's designed to do, and it's not anybody is attempting to do that. It's going to be wrong every single time. You just want to know it's in this range, okay? And so again, we'll see that we got the same signal telling you that there's a peak in this range. Obviously, it's there. I mean, we have not had a pullback at all in this massive move here for almost 2,000 points. So there's obviously a big move coming here. Just random, it's going to be there. If you actually call it a peak, in which I think we actually are seeing, but if it was actually a peak, it would be a much bigger move. Like I said, 50% correction would be absolutely normal. So that's a 4,000 point move to the downside. And again, all this is just information you could find for yourself on any chart that you'd like, but this is just what I'm seeing and why I'm saying that I wouldn't be a buyer in this market. As you guys know, we've had a little bit of a pullback in the markets today, and that's fine. We did get a sell signal also. If you go here to the nightly, if you go to the free website at perfectstockalert.com, you can go here into the market section, and their market charts right here. Those are my charts, my personal charts, my short-term and my long-term charts. You can check them out whenever you'd like. I've already updated one. It was the NASDAQ, I believe, and I'll be looking at some others as well tonight and be updating them. Okay. God bless. Take care, and that's about it. I'll see you all tomorrow. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.